Hey everyone, welcome back to the channel. Today, we're taking a deep dive into the future of money. We're talking about cryptocurrency 2026 and what you absolutely need to know before you even think about investing. The crypto world moves at lightning speed, and what worked yesterday might not work tomorrow. So grab a coffee, get comfortable, and let's unpack what the next few years could hold for digital currencies. First, let's talk trends. We're seeing a massive shift in the crypto landscape. It's no longer just about Bitcoin and Ethereum. We're witnessing the rise of specialized blockchains, increased institutional adoption, and a huge push towards making crypto more energy efficient. By 2026, experts predict that cryptocurrency will be more integrated into our daily lives. Think about it, paying for groceries, buying tickets, or even getting your salary in digital assets. This isn't just a distant dream anymore. It's the direction we're heading. We're also seeing governments worldwide taking a serious look at crypto. Some are creating their own digital currencies, known as CBDCs, while others are establishing clearer regulations. This move towards regulation is actually a good thing for long-term investors. It brings stability and legitimacy to the market, which could pave the way for a new wave of mainstream adoption. So the big picture for 2026 is a more mature, more integrated, and more regulated crypto ecosystem. Now, let's get real about the risks versus the potential rewards. We've all heard the incredible stories, people becoming millionaires overnight. The potential for high returns is what draws so many of us to crypto, and it's true the gains can be life-changing. But on the flip side, the risk is just as significant. The crypto market is notoriously volatile. Prices can swing dramatically in a single day. You could see your investment double, or you could see it cut in half. That's the reality. This isn't a get-rich-quick scheme. It's a high-risk, high-reward asset class. Another risk to consider is security. Scams, hacks, and fraudulent projects are unfortunately common. You have to be incredibly careful about where you put your money and how you store your assets. So the key takeaway here is this: never invest more than you're willing to lose. Seriously, this should be your golden rule. The potential for huge profits is there, but you have to be prepared for the roller coaster ride that comes with it. So, how do you navigate this wild west without getting burned? Let's talk about safe investing strategies. First and foremost, do your own research. I can't stress this enough. Don't just buy a coin because someone on social media told you it's going to the moon. Read the project's white paper. Understand its purpose, its technology, and the team behind it. What problem is it trying to solve? Does it have a real-world use case? A great strategy for beginners is dollar cost averaging, or DCA. Instead of trying to time the market and buying at the perfect moment, you invest a fixed amount of money at regular intervals, say $50 every week. This strategy helps smooth out the volatility and reduces the risk of buying everything at a peak. Another crucial strategy is diversification. Don't put all your eggs in one basket. Spread your investment across different types of cryptocurrencies. Maybe some in established players like Bitcoin and Ethereum, and a smaller portion in more speculative, up-and-coming projects. And finally, think long-term. The most successful crypto investors are often those who hold their assets for years, weathering the market's ups and downs. Patience is a virtue, especially in crypto. Let's quickly demystify some of the buzzwords you hear all the time: NFTs, DeFi, and blockchain. Blockchain is the foundational technology behind almost all cryptocurrencies. Imagine it as a digital ledger, a public record of all transactions that is shared across a network of computers. This makes it incredibly secure and transparent because once a transaction is recorded, it can't be altered. It's the core innovation that makes crypto possible. Then you have DeFi, which stands for decentralized finance. The goal of DeFi is to rebuild the traditional financial system, things like lending, borrowing, and earning interest, but without the middlemen like banks. It's all done through smart contracts on the blockchain, making it more open and accessible to everyone. And finally, NFTs, or non-fungible tokens. Unlike a dollar or a Bitcoin, which are fungible and interchangeable, each NFT is unique. They represent ownership of a specific digital item, like a piece of art, a collectible, or even a virtual piece of land. Think of it as a digital certificate of authenticity. While the initial hype was around digital art, the technology behind NFTs has the potential to revolutionize industries like gaming, ticketing, and intellectual property. Understanding these concepts is key to seeing the bigger picture of where the crypto space is headed by 2026. Give you a clearer perspective. Let's look at some expert insights and real-world examples. Many leading financial analysts believe that by 2026, the distinction between traditional finance and crypto will start to blur. We're already seeing this happen. Big companies like PayPal and Block are integrating crypto payments. Major investment firms are offering Bitcoin ETFs, allowing people to invest in crypto through their traditional brokerage accounts. This is a huge vote of confidence. Let's take a real-world example of blockchain's potential beyond just currency. Look at supply chain management. Companies can use blockchain to track a product from the factory to the store shelf. Every step is recorded on an immutable ledger, ensuring authenticity and preventing fraud. This isn't just a theory. Companies like Walmart are already using it to track food products. Another example is in the gaming world. With NFTs, players can truly own their in-game items. They can buy, sell, and trade them on open marketplaces, creating real economic value from their time spent playing. These aren't just niche applications. They are powerful examples of how this technology is solving real problems and creating new opportunities. The experts agree, the underlying technology is here to stay, and its applications will only grow more sophisticated and widespread by 2026. So what does all this mean for you, a potential investor looking towards 2026? It means you have to be smart, patient, and prepared. The crypto market will likely continue its journey towards maturity, with more regulation and mainstream integration. The wild volatility might calm down a bit, but it won't disappear entirely. Your strategy should be built on a foundation of solid research, diversification, and a long-term mindset. Start small, learn as you go, and never, ever invest money you can't afford to lose. The opportunities in the crypto space are immense, but they are not without risk. By understanding the trends, acknowledging the risks, and using safe investing strategies, you can position yourself to potentially benefit from this incredible technological revolution. Remember, knowledge is your most powerful tool in this market. Stay curious, keep learning, and make informed decisions. The future of finance is unfolding right before our eyes, and it's going to be a fascinating ride. Thank you so much for watching. I hope this gave you a clearer roadmap for what to expect from cryptocurrency in the coming years. If you found this video helpful, please hit that like button, and don't forget to subscribe for more content on finance and technology. Let me know your thoughts on crypto in 2026 in the comments below. I'd love to hear your predictions. Stay safe, invest wisely, and I'll see you in the next video.